Hi, everyone. This is Karl from ReMax. If you're thinking of investing in real estate and you don't want the bother of dealing with tenants, but you want all the benefits of cash flow and appreciation, this episode is for you. I'm here with Marco from Equiton. Welcome, Marco.
Thanks for having me, Karl.
Marco, can you please give us a brief overview of Equiton and what you specialize in?
Yeah, Equiton. So all we are is a vehicle for individuals to invest in real estate without managing tenants, without relying on a singular tenant, a singular house. And we're made up of a ton of professionals, just about 250, that specialize in apartment buildings, commercial properties, lending, as well as land development, construction. And we've prided ourselves over a decade providing returns to investors.
So can you explain what alternative real estate investing is and how it differs from traditional real estate investing?
Yeah. So alternative real estate investing really is a hands-off approach. So rather than going out to purchase your own physical piece of real estate, you are investing into a company like Equiton. And Equiton, we pool investor capital together to then go out and purchase other real estates, whether it's commercial properties, apartment buildings, or even just land development opportunity.
Okay, very nice. A lot of people don't really know about this approach. So how does real estate investment funds actually work, generally and specifically to your company?
Yeah. So in general, a real estate investment fund, you would invest inside of a company.
Okay.
And that company will then go and purchase pieces of real estate to then pay that profit back to its investors.
All right.
So for us, at the very least, it works in that exact same way.
Gotcha.
Mind you, we have 3 different strategies that we employ across 3 different solutions. One's predicated on investing in apartment buildings. One is on the construction of new real estate, whether it's townhomes or mid-rise condominiums, or commercials and a mix of condominium builds as well.
Okay. So you gave 3 options there that your company provides. How does an investor know which one to invest in specifically?
That is for us. We would discuss with them what their financial goals are, right?
Gotcha.
We want to make sure everything is tailored for an individual's needs. So we would go through an extensive just overview, see what a client wants to invest in, see what their goals are for the future, whether it's retirement, just a big purchase, and go from there.
Great.
Yeah.
So what are some of the benefits in investing in a fund in comparison to traditional real estate?
Fully hands-off approach. So it's true passive income. You're not lifting a finger to manage tenants. You're not lifting a finger to get mortgages, do construction, as well as diversification. Rather than relying on one singular tenant, you're diversified against a plethora of properties over different provinces, as well as just avoidance of market volatility, the ups and downs.
Right. Because I know you yourself, you have invested in traditional real estate.
Yeah.
You invest in this form of real estate as well. So you have seen both, the highs and lows of both, I guess. What are some of the risks with this particular form of investing?
Really, so some of the risks are the same risks attributed to general real estate ownership.
Okay.
The big benefit with us is rather than relying on one singular tenant to pay your rent, maybe even 2, 3, 4, 5, you're relying on just about 4,000.
Wow.
So you're heavily diversified. It's very unlikely that 4,000 individuals would stop paying us rent all at the same time.
Okay, great. Have you seen any, because I know you've been in this for a while, have you seen any downside through your tenure working at Equiton, any downside in the market that's really affected customers or your clients?
You know what? There hasn't been really any downside.
Wow.
Downside, my question is in terms of negative returns,
Yeah,
correct?
exactly, yeah.
Yeah, so there hasn't been really any downside at all.
Wow.
So in the past decade, we've never had a negative month, let alone a negative year. And in this space in general, there's actually an index that tracks this, the Private Canadian Apartment Index. Over the past 40 years, there's never been a negative year. And we're talking about major crises in that time. COVID is one, '07, the 2000s tech bubble, even the 90s crash of real estate. There's never been a negative year in all those years.
Right. This is awesome because especially in a market like this where people are losing their jobs and sometimes unable to pay rent, this form of investment seems pretty safe.
Yeah.
So what should someone look out for when they're evaluating a real estate investment fund?
I would say look beyond the showcased returns. So don't just, it's like window shopping, right? You can't look at just the window price tag. Does the product feel good? Does the product fit well? It's the same thing that goes for investment funds, right? You want to look at financials. You want to look at the management. You want to look at the strategy of the fund. Okay. There's a plethora of things to look at under the surface level of just returns.
I see. And you would walk someone obviously through the strategy and everything like that. That's great.
Yeah.
So what kind of returns can someone typically expect? And how does that compare to like the stock market and things like that?
Yeah. So I believe the S&P has what averaged just about 9.5% over the past 100 years or whatever it's been, right? With us, we target between 8 to 20% across all of our products on average. So when we're talking about our lower risk avenues, we're looking at the lower end returns. But even on those, we've averaged about 10% per year. But then our construction projects, we target at least 20% per year.
Wow. Okay, great. And how liquid are these investments? Like, can a client pull out their money at any time, or like how can they pull out their money if needed?
Depending on the investment, you're fully liquid. Like I can have my clients call me today and we'll get them their money back. We just have to get all the paperwork done, mind you, all the back end. But yeah, it's very liquid. In terms of construction, typically that's when we look at longer term timeframes. You're parking money away for a few years.
I see. Are there any form of investments within these funds where you can get a return monthly, or is it all just like after a year you realize some of your returns, or is it quarterly? How does it work in that sense? Yeah,
so I'll reference our apartment fund in specific. So our apartment fund, really what it is, it's emulating rental property ownership. Okay. And it comes along with all the benefits like monthly cash flow, as well as the increased value of your principal investment. Okay. So clients, they can receive funds monthly if they want to. If they wanted to reinvest it back with us, they could.
Okay, that's amazing. I just want to make sure we're clear.
Yeah.
So someone can actually get monthly cash flow without having any tenants of their own.
Yeah.
That's pretty amazing. So what are the typical exit strategies for your investors that you have seen?
So in terms of exit strategies, it all depends on the strategy of the investment, right? If we're talking about construction, ultimately it's the end goal is to sell those individual units, right? But in terms of rental property ownership, it's buy, hold, long term. So people can hold it for 2 months if they wanted to. People can hold it for 20 years if they wanted to. It all depends on their preference.
Okay. As you know, the real estate market has slowed down quite a bit. Property values have fallen in certain areas. And we know that might be the threats of tariffs, interest rates. Like, how do interest rates and inflation impact real estate funds?
So they typically, like the increase in interest rates, they typically provides downward pressure, right, on real estate, right? People can afford to purchase real estate. But with us, because we have an active management style, we find value add opportunities to be able to increase those property values, even amid harder times like now. Okay. And throughout that time period, we've actually showcased that. Like last year, it was a very hard year with real estate, but we were finding value to increase our properties. And actually in 2024, we found just about $20 million worth of increase.
Wow. So where are these properties typically located?
We actually have property in Ontario and all the way west to Alberta. We're expanding across all of Canada at this point. Next province that we're looking to enter into, looking like British Columbia, but right now we're getting our feet wet in Alberta.
Okay. And are those apartments? What about the projects where you're building new construction? Is that also throughout Ontario and Alberta, or?
Typically, construction, we focus on the GTHA.
Okay.
It's the main economic hub of Canada, in our opinion, a big center for population.
Great, great. And what trends are you seeing in alternative real estate investments? Are there any particular trends that you're seeing at the moment? Like, where are the opportunities that you're seeing at the moment?
We're seeing a ton of opportunity in rentals.
Okay.
Yeah, a big aspect of the business is our rental property portfolio, and a lot of interest is coming there. Like last year, we saw just about a $250 million worth of real estate purchased, as well as invested with us, and it's showcasing to be the stable side of the Canadian marketplace right now.
Any idea why the rental?
You know what? I guess it's the stable cash flow. Everyone needs a place to live.
There is.
Right. Regardless of immigration, affordability crisis, people need places to live in Canada, and that's a key thing.
Absolutely, absolutely. So for someone new into getting into real estate investing, like, what's one piece of advice you can give them?
Really analyze your goals. That's know what you want. Know what you want to achieve out of your money. Because rather than putting it into something, regretting it a couple years later, make sure it's foundationally solid to achieve your long-term goals. Mind you, we would help out with that, making sure that what you're investing into is well situated. But yeah.
Right. That's sound advice. And how can someone get started with your company?
Give us a call. Honestly, you can book in some educational time. We're happy to walk through really all the aspects of what we do, and like our minimum investment is $25,000, and that gives you access to either one of our 3 options.
Okay, very good, very good.
Yeah.
And how can someone reach out to you?
Reach out to you. Reach out to us. So we're happy to have a conversation. All of our investments are RSP eligible, TFSAs, as well as through a corporation. Doesn't matter what it is. We will assist throughout the whole way.
Okay. And for someone, looking to utilize their retirement savings account for this, do they have to do anything in particular, or do you guys handle all of that?
We handle everything. We'll handle everything on the back end, transfers, paperwork. It's a hands-off approach that we want to give in terms of transfers as well as managing real estate. Okay.
And I imagine, of course, statements are provided all the time. Like everything is documented. Our clients, they can feel as though they can just put that $25,000 and it's gonna grow, issues, no problem.
They can even look at our investor portal. We have access for an investor portal for all of our investors. They're able to log in monthly, weekly, if they want to log in daily, if they wanted to. But it showcases all investment performance year to date.
Perfect. This has been amazing. Thank you so much, Marco, for this information.
Thank you for having me.
Right. So feel free to reach out to us. We're going to put Marco's contact information, and our contact information will be at the bottom of this video. And we look forward to hearing from you. Thanks again, Marco.
Thank you.